Test, test, mic check, mic check. Test, test, test. Taco time. Taco Tuesday. Time for my afternoon cup of tea. Oh, that's good. All right, 12 o'clock. Wait about 30 seconds here, just for any stragglers who are coming in, and then we're gonna get started. All right, let's do it. My name is Derrick Oldensmith. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. These are the positions that I am currently involved in. I actually think I just got out of DKNG about 30 seconds ago. I did, but I got bids out that might get me back in. Just want to keep this as up to date as possible, even as things change in real time. So anyway, these are the positions that I have right now. We're going to be talking about some of them. We're going to be talking about markets. Quick story about my background. I'm sure a bunch of you have been following my weekly webinar for a while, so this is repeat information. But I've been with T3 really since 2010. I've been a licensed trader with them since 2011. I'm senior trader and registered principal for the firm. I have mentored well over 100 professional traders, currently managing a group that is well in excess of 50. My personal time, I'm big into martial arts, I'm big into skiing, hiking, and traveling. And again, if you've been following the webinar week over week here over this year, I've really used COVID as an opportunity to travel around the country, and it's been an amazing experience. A few months in Wyoming, month in Montana, a few months in Idaho, and now I'm out here in Lake Tahoe, California, where it's absolutely beautiful, 10 minutes from the ski mountains. I actually destroyed one of my skis over the weekend, which I'm pretty upset about. Hit a rock at Kirkwood pretty hard. I ripped the edge right off my ski, which is pretty unfortunate. But that's the quick background about myself. Today we're going to be talking about all things markets. We're going to be talking about the market itself, some individual names. Then we're going to be talking about T3 Trading Group specifically. T3 Trading Group is the sister company to T3 Live. T3 Trading Group is the FINRA registered broker dealer that engages in both professional proprietary trading and retail trading accounts. If you have any questions about anything that I speak about at all today, about markets, about T3, about my favorite mountain to ski out here in Lake Tahoe, here's my email address. Feel free to reach out. So let's go to the charts. All right, so here's my 5-minute chart of the SPYs. I'm actually going to go to the SPX, the cash, and we're going to start with a daily chart here. So yesterday was an interesting day. By the way, happy holidays to everybody. Merry Christmas, happy Hanukkah, happy holidays, whatever you celebrate, whatever you're into. Just when we thought that 2020 was about to start, slowing down into the end of the year because it's the Christmas week. Markets closed on Friday. Market has a half day on Thursday. Just when we thought everything was going to start slowing down, well, we have a mutant strain of coronavirus that has come to play. We actually knew about this on Friday. I've always found it funny how and when the market decides to react to things. People who believe in the efficient market hypothesis, I don't understand that. They must not be traders, because you see it happen all the time. News comes out, market knows about it. We knew about this mutant strain of the virus on Friday, honestly, maybe even before Friday, and the market did not care, and then all of a sudden, yesterday morning, to start the week off, we're set to gap down. At one point, at about 6 a.m. yesterday, we were set to gap down really big, like 3.5% or so. A lot of that was paired off by the time the market opened. If I go back to a 5-minute chart here and I show you guys the pre and post market price action, one of the great things about being a professional or a retail trader with T3, I got to go to the SPYs to show you that, is that you can trade starting from 4 a.m. all the way till 8 p.m. So you can see here, this is yesterday morning. 6 a.m. is when we bottomed. SPYs went all the way in this capitulation move down to 358. My team and I, we were really looking at this 360 area as an area to come in and buy. So, what was I doing pre-market that day? Well, I was covering short positions and I was adding to long positions early on in the day, capturing some of this move. So by the time the market actually opened yesterday, there was a massive bounce. Market opened up, again, we're looking at the SPYs right now, at about 366 yesterday, when that pre-market low was 358. That's an $8 pre-market bounce. And honestly, it took away a lot of the opportunity, that bounce, if you were waiting, just purely for the market to open. I felt that the market open yesterday was actually really tricky because we were still gapping down by about 1.5% or so in the S&P, but we were $8 off the low. So what do you do in that scenario? Yeah, there was still room for the market to bounce and potentially fill the gap, but you're $8 off lows already from the pre-market, so your risk reward on buying the open yesterday is terrible. even if we could potentially bounce. So by the time the market opened, when I was doing my morning meeting with my team yesterday, I was saying less is more right now for the open. The opportunity was there pre-market. I was covering a bunch of my shorts. I was adding to my longs. And by the time the market was open, it was a pretty profitable open. I probably could have stopped trading at 9:30 yesterday. I didn't, because I never just stopped trading. If you know me, it's very hard to pull me away from the markets. If anybody remembers, I tried to take a week vacation back a few months ago to go see Yellowstone and Grand Teton National Parks. I ended up trading every day. That was the end of August, beginning of September, when the market had its capitulation top. So what did the market tell us yesterday? Well, the market told us yesterday that it still does not care about COVID. It does not care about this crazy mutant strain of the virus that is apparently 70% more infectious than the virus that we're already dealing with. We gapped down big and we bought it up. And technically, we are still in a pattern of higher highs and higher lows. This low from during market hours is higher than the low from December 11th. So we are still in this pattern of higher highs and higher lows in the market. What I'm telling my team every morning, there's plenty of things to be cautious about right now with the market, and things that maybe you want to keep in the back of your brain to be worried about, but you just got to keep erring on the side of the long side. The easy money has without a doubt been to the long side, especially when you think about some of these crazy stocks that I've been talking to you guys on the weekly webinar about that are moving 100%, 200%, 400%, sometimes over the course of as short of a time as a handful of days. And I know a lot of people, when they see these stocks that are sometimes even borderline, like not even real companies, going up 400% and becoming super extended, that the natural inclination is, oh, it's up too much, I want to come in and short. That's not where the easy money is. That's hard money. And there can be good risk reward opportunities. One coming to mind was Baidu the first time it got up to 200. The first time Baidu got up to 200, bunch of the members of my team had a great short when it broke 200 and came back down, $15 worth of reward. But people were talking about Baidu being extended to the upside when it was at 175. And guess what? It didn't stop for another 25 bucks. And when you look at this move, would you rather be long or would you rather be short overall? Yeah, great opportunity to have a day trade short on that day to make a little bit of money, shorting on the way back down through 200 bucks. But that's much harder money. And when you're going counter trend, when you're going counter momentum, your reward is inherently limited. Whereas if you are with the movement of the stock, with the trend, with the momentum, your reward is potentially unlimited. So, obviously it's in hindsight, but would you rather be long or would you rather be short Baidu at almost any point over the course of the last month? The answer is obviously long. That's where the easy money is. And if you are long from, I don't know, my team and I were looking at this thing back down here at 150. If you're long this thing from $150 and it's up at $200, the question is, well, how much profit do I want to book? What type of game plan do I want to have? How greedy do I want to be now that the stock has gotten so extended into 200? And now maybe you're still hanging out on some of that stock and it's starting to give you this nice looking bull flag here. I think it needs a little bit more time. I want my ADMA, which is what I consider to be the upper band of technical equilibrium for my trading, to kind of catch up to the base that it's forming a little bit more, and then maybe you can get another leg on it. But would you rather be long this stock or would you rather be trying to fight it to the short side? Without a doubt, the answer is to the long side. I traded fuel cell long a couple days ago. This actually, on this day here is when I bought it, I think a little bit above 850. I'm out of the position now. This was actually really difficult for me, psychologically, to buy fuel cell. And I'll tell you why. I hate this stock. This company's been around forever, and it always has seemed to me like whenever it starts to have a big boost, that it's always signaling that it's not going to last, and it's something to even pay attention to for the broader market as a whole. And then next thing you know, guess what? Fuel cell is back to its usual games of just trending lower and trending lower and trending lower. But more recently, and we're seeing this with a lot of these high-flying stocks, it's set up with this beautiful bullish symmetrical triangle, ended that bullish symmetrical triangle with an inside day. So we make 850 our trigger buy price, technically, looking for the momentum to really come back into the stock. And again, that's exactly what happened. And the reason that this was a difficult trade for me personally is because I've always hated this stock. But I got to look at the technicals. The technicals are telling me the story, and these names all have the potential, clearly, to move 400% of the time if they want to. This stock just here in November was a $2.50 stock, and then like a week and a half later, it's $11.30. I mean, that's more than 400 times, right? These movements are incredible. And would you rather be long at almost any point on this name, except for when it was ridiculously extended? That's why we have our extension rules. Or would you rather be trying to fight this thing to look for that short where, again, your reward is inherently limited? I don't like the idea of being long fuel cell, but what I do like is money. And the money to be made, without a doubt, at least right now, and this could change at some point soon, has been to the long side. And to me, it's nuts. And I think, and I'm seeing and I'm identifying what I really think are like little bubbles all over the place. Not like a massive bubble necessarily for the market as a whole, but you're seeing these little bubbles in some of these stocks that are moving insanely like this, or even honestly like a Tesla. Tesla with all that hype coming into the S&P. I've been telling my team that I really think that this is a sell the news event. A lot of the guys on my team were getting short into $700 and yesterday, and even adding into it today, just because it's like, look, I like Elon Musk as much as the next guy. I really support the innovations that he's trying to do. But I mean, how many cars do they have to sell to actually justify the valuation that the stock is trading at? But guess what? The market hasn't cared about valuation. So we see these little bubbles all over the place for certain stocks, and you can come in and carefully put on shorts in certain scenarios. What I'm telling my team all the time is that you do look for any of this stuff to the short side. You want to be shorting it when it's on the way down, not just placing offers out when it's on the way up. That's a great way to get run over. You want to see some sort of upside capitulation, and then you have a specific level that you can short versus, so you have defined risk, and you are then shorting them on the way down. And yeah, your reward is going to be inherently limited, but some of these things, when they become so extended on that daily chart, if you're able to actually pick a spot to be able to come in and put that short on, it can pay you pretty well. So the market, again, is really just showing us that it does not, we can take a look at the Qs also, it does not care about COVID until it does, but right now it doesn't. So Qs are in a pattern of higher highs and higher lows. Our S&P's in a pattern of higher highs and higher lows. The IWM, the small caps, mid caps, which is something we've been paying attention to for the potential of money rotation, which we've seen a lot of over the course of the last few months, also in a pattern of higher highs and higher lows. And things are looking good. As far as today's trading session, we were looking at big tech. We're looking at Apple. Apple came out with that news yesterday afternoon that they're potentially getting into electric cars. That's going to be interesting. I don't know what they're going to call it. Maybe your iCar. I'm going to jump in my iCar and drive to the office. I don't know. But we have been looking at these long consolidations that tech has been in, and you can see that in Apple, which I'm long. You can see that in Amazon, which I'm long. You can see that in Microsoft, which I'm long. All these big consolidations that have come in, and we had been patiently waiting for them to start to go. Apple went first. Apple went first on December 15th. It caught an upgrade that day. We were looking at Apple through 125 that morning. Was a fantastic trade. Was a little nerve-wracking how it broke that low because of the gap down yesterday. But overall, this name is starting to break out of this multi-month consolidation that it's been in and is giving great continuation off of that trade today. Amazon is struggling to really capture its legs, but we identified this day here on December 16th. It's a day to take notice of where it's potentially starting to break out of its tighter pattern. So we got big tech on the radar again. And as long as Amazon is holding up above, let's call it 3160. It's still in play and still healthy, but I want this thing to start closing above 3,200 and start showing me a little bit more. Microsoft, once again, went on the same morning as Amazon to start to break out. You can see this positive Maribozu. It's what I call this candlestick. It's a positive Maribozu. It's a very bullish candle. It's a breakout candle. So we took notice of that day. As long as Microsoft continues to hold up above that day's low, it looks great. And then yesterday, I caught a solid upgrade. I forget who upgraded it, but it gave the stock relative strength early on in the day when that whole market was down like 3.5% yesterday morning. Microsoft was only down like 0.5%. That is the concept of relative strength. Relative strength is one of our important layers of probability. I teach my team, so trading is risk reward, probability of success. Risk reward is simple math. It's just, just simple math. Probability in markets is much more difficult. It's much more dynamic. It's much more difficult to define. And the reason why that is because there are so many different things that can affect the market at any given point in time. And all of those things, we call those layers of probability. So for example, the market. If you're looking at a strong market and you're looking at a stock, and you know if the market is strong, it's in an uptrend, you're going to have a higher probability of success buying any stock than if you were buying a stock in a weak market. And again, another one of them is relative strength and relative weakness. Well, Microsoft showed us that relative strength early yesterday morning and made for a great trade. So we have our eyes on big tech right now, which have been consolidating for multiple months to see if they start to go. And you also want to be paying attention to interest rates, right? You want to pay attention to that TLT, which has been a little bit boring. But if we start seeing this TLT go up and interest rates go down with things that are kind of going on right now, then that will also be good for tech. And the opposite's true as well. If we're seeing the TLT go lower, which means that interest rates are going higher, that's going to be supportive of that rotation into value theme that people have been talking about a lot. One of the newer positions I put on a few days ago is this AR. This was not my idea. This is the idea of one of my teammates. And again, I got a really strong team of professional traders that I'm working with on a day-to-day basis. He brought AR to the table as an idea really after this day, but we needed it to reset up. Well, here was your reset up. It price corrected back down into the ADMA. We were looking at it to get involved on the break of $5. And now this thing looks fantastic. This is actually a natural gas play. So, and it's held up much better than the XLE has, which again is a little bit more oil focused. XLE had this beautiful mean reversion here for November and December that some guys in the team were able to capture and then rolled over, whereas this AR has still managed to be relatively strong. I wouldn't come in and buy it now. I think it's a little bit extended and needs time to reset up again. And that's what I'm talking about all the time. Guys will bring like a laser idea this morning, like all of a sudden Apple's getting involved in electric cars. Well, let's take a look at this laser which does the LiDAR, which is an important component, and Apple has announced that they're going to want to be outsourcing a lot of that technology. But the problem is you're too late, right? I have no interest. And look, this market has been so nutty. It really has been, where we're seeing it was extended on this day. I would never have bought this stock on this day of $30. It's just against my rules. It's way too extended from what I consider that equilibrium area to be. But guess what? If you chased it anyway and you bought it at $30, by the next day it's at 43. So we know these things can go, but when you are buying a stock that is extended, that's already had a big move, you have a lower probability of success and a worse risk reward. So I have no interest in coming in and buying LAZR today when it's this extended. I want it to reset up, and it's the setup that gives me the trade. NEO we were looking at, and it's actually failed today, or at least it's price corrected back down a little bit more than I would have liked it to. But NEO, we're looking at this 48 to 48 quarter area to potentially start getting back involved. So that broke out yesterday as well. Yesterday's candle is going to be really important. Yesterday's low. I thought NEO had been a little bit tricky kind of in this area because of all this price congestion. That's another key word that we talk about when you're trading a stock in an area of very high price congestion. It does not move as well as it would otherwise. So you got this thing that finally broke out above our area yesterday where we want to start paying attention to it again. And as long as it's able to stay above yesterday's low, I'm interested in potentially being, long this stock. And today it's kind of price corrected back down. Today's been an interesting day because the market, we can look at the SPYs. The SPYs have been very tight. This is today, this is yesterday. The SPYs have almost done nothing at all today. The Qs have had a little bit more volatility to them, but a lot of things to me feel really, really heavy. A lot of things have kind of pulled back down. I know guys are looking at Palantir. You gotta love the technical pattern here in Palantir. I hate the company fundamentally. I'm short as of right now, just looking at this name as kind of an example of things that are heavy today. Airbnb, I'm long. And Airbnb has been a little bit heavy in certain points as well. I see it's kind of catching a bit again here this afternoon. But at one point when it was retesting like this 160 area, I was like, okay, this thing's looking a little heavy today as well. This Airbnb, I still have a decent sized position in it, but as long as it continues to hold up, is actually becoming one of my best trades of the year. And it's just here into the end of the year. So you gotta love that. You gotta love when that happens. We came in and we were really identifying it when it got back above 125 as a buy on the open this day. So that one's only gone $50 in 4 days. This market's nuts. I love Airbnb as a company. I'm talking to you guys from an Airbnb in Tahoe right now. I love from a marketing perspective, like Airbnb is like a word that you would use in a sentence, almost like Google, right? Like if you don't know a piece of information, go Google the information. And if I say to you, well, if I'm staying in an Airbnb tonight, or I'm gonna go Airbnb this place, you guys know exactly what I'm talking about. But no one says I'm gonna go booking.com this place. I'm gonna go Expedia that house, right? I love that idea from like a branding perspective that kind of makes me really like this company from what I call a qualitative fundamental perspective. So I'm super bullish on Airbnb. I do think that the valuation at 170 or so is kind of ridiculous. But guess what? Market doesn't care about valuation. And the truth is I feel the complete opposite about Dash. I shorted Dash a little bit after its IPO. I didn't stick with it. I actually got out of it for a small loss. And that was unfortunately, right after it broke down. I think Citron came out and put a $40 price target on DoorDash. And I don't always agree with Andrew Left at Citron, but in this case, I totally 100% do. These companies basically IPO'd one day apart from each other, so there's been a lot of talk. And I think the valuation on both of them is insane. But Airbnb, I love it from a marketing perspective. I love the company. You look at this DoorDash. What separates DoorDash from Uber Eats, from Postmates, from Grubhub? Apparently Lyft is getting into the space now, and obviously it's a losing money business. So it just doesn't make any sense to me. But shorting this market has been so difficult. It really has. The easier money has without a doubt been to the long side. Will that change at some point? Yeah, it will. When will that change? I have no idea. All I know is that right now my big picture technicals on the market are bullish, and I am going to continue to broadly err on the side of the long side of the market rather than the short side until something changes. And when something changes, I'll try to let everybody know here on the Tuesday webinar that I do every week. So keep tuning in. I see that there's a question here from Eddie about AHT. So we can take a look at this. I'm not familiar. Ashford Hospitality Trust. Is this a REIT of some sort? I'm not familiar with this stock at all, to be honest with you, Eddie. So I can't really give you too much of an opinion about it. Technically, obviously, had a really big day on big volume on this day here on November 9th. So technically, as long as it's above $2, it's intact. I don't know what has it down 16% today. I would assume that that's a news event of some sort. It's kind of built out a wedge here that it actually looks like it's breaking to the downside. So I really don't like the fact technically that this thing broke below $3.26 today. And personally, it's not something that I would want to be involved in at this point. So if you have it, hopefully you got yourself stopped out at 325 earlier today when it looked like it's starting to break its wedge to the downside, which is not a good thing. Doesn't mean it's going to completely fail. This wedge would technically be a bullish pattern if it didn't break to the downside based off this positive Maribozu candlestick as a start. But that's really all I got for you on that one. Hey, Omar. Omar from Pittsburgh. Welcome to the weekly webinar. I got a quick story about Pittsburgh. I've only been there once, but I have this great uncle Bill that is like famous in my family because he like ran away when he was 13 years old and sailed around the world, and then he fought in the war against Mexico, and he chased Pancho Villa back into Mexico, and he was a prize fighter. Apparently, my great uncle Bill has his likeness etched into the golden doors that are at the Pittsburgh main courthouse. So if you ever check that out and you see a person in there, that's my great uncle Bill. Anyway, let's get back to things. So, we went through charts. Let's talk a little bit about T3 Trading Group. Let's talk a little bit about prop trading and our retail accounts, maybe a little bit as well. So, what is T3 Trading Group? T3 Trading Group is one of the largest proprietary trading firms in the United States. We have over 500 licensed professional accounts. We've got offices throughout the East Coast. Our headquarter office is in Manhattan. That's typically where I'm working out of. I run the trading floor there along with Scott Redler. Unfortunately, the office has been closed for basically almost all of this year because of COVID. Hopefully at some point we'll get it open again. But even before COVID hit, we had remote traders who were spread all throughout the country. So it has not been a problem for us to get everyone out of the office and to get, to get everyone out of the office and get everybody trading remotely. We have all the infrastructure for it. And if anything, the communication remotely has been excellent using our virtual trading floor. So T3 Trading Group is a SEC broker-dealer and member of FINRA SIPC. So what that means is all of our professional traders have to become licensed with an SIE, Security Industry Essentials, and Series 57 examination, which is the Professional Proprietary Traders exam. T3 will sponsor you for the exam, will provide you with the study materials necessary to pass the test. You will also have to pass a background check. You cannot be a convicted felon or have declared bankruptcy in the last couple of years and join the firm. If you don't want to become tested and go through the SIE and the Series 57, well, T3 has retail accounts available as well. Our retail accounts compete with all the major brokers that you have ever heard of. Robinhood and E-Trade and TD and Interactive Brokers. T3's edge in the retail space is direct market access. We do not sell your orders out to HFT firms. And if everybody read what just happened with Robinhood, Robinhood is getting fined, I don't remember the number, I think it might have been 85 million, which honestly is probably not enough, for misleading the users on their platform to make people think that they're trading for free. No one is trading for free. I don't care who you use as a broker, you're not trading for free. Either you're paying a commission cost or your orders are being sold out to HFT firms. Those HFT firms are front running your orders and you're getting worse pricing, which manifests itself as a performance drag. My understanding of this, based on the research that I've done, is that it is actually significantly more expensive to trade commission-free than it is to trade with a commission. And again, it depends a little bit on that commission cost. T3's retail accounts have extremely low commissions, and we do not sell your orders out to HFT firms. So if you don't want to become licensed, and you are with an unscrupulous broker who is selling your orders out to HFT firms, reach out to me and you can talk to me about a retail account, assuming you're an active trader. And if you want to become a professional trader, there's a lot of benefits to that, which I'm going to talk about here in a minute. For our professional traders, we have 3 different trading software options: Lightspeed, Sterling Trader Pro, and Wolverine, also known as WEX. On the retail side, it's only Sterling Trader Pro. They're all excellent platforms. Personally, I've been using Lightspeed for over a decade. I love it. The charts we were just looking at are light speed charts. So it has all the charting capabilities I could want, has depth of market, direct market access, everything I could want. Sterling Trader Pro, exact same thing, again for our retail accounts. So once those licensing exams are passed, we can get going with trading. You have 3 software options. I start by allocating a trader a demo when they first get going for the first week or 2 so that they can learn the software before then switching them over to the live account. I am specifically an equities trader with the firm. That's always been my focus. We do also have equity options, futures, and options on futures. So if any of these asset classes interest you, reach out to me and I can either speak with you directly about it, or I can put you in touch with someone else on my team who can provide you the information that you're looking for. When you get started, so I have an awesome team. Let me brag about my team for a minute. I have an awesome team. I know in the beginning the slide says it's in excess of 50. I think it's actually closer to like 100 traders down. Some of these guys are entry level. Some of them are entry level, recent college graduates. But some of them are professionals for decades. Former fund managers, former floor traders, former pit traders. We have amazing communication through the ProDesk VTF, the ProDesk virtual trading floor. That's where T3 Trading Group's professionals are primarily hanging out. And, we're sharing ideas. We are, we're all influencing each other to make everybody better. My team makes me a better trader, and that's one of the things that I love about it. And if you're a new trader and you're just getting involved in the business for the first time, well, you're going to get access to that team. You're going to get access to a training program. You're going to get access to daily morning and afternoon meetings. Every single day I do a Q&A after my afternoon meeting where all questions are on the table and we can chat about anything. So you're going to get access to a whole host of mentoring, training, and development that you will not be able to get on your own. And all of that is free if you're a professional trader with the company. Our goal is to make people as successful as possible. That's it. It's very straightforward. If you're a successful trader, you're making money, the firm's making money, everybody's happy. So we're thinking big picture here at T3, not, let me, charge this newer person a training fee as they walk in the door. No, I want you to be successful and have a professional trading career that lasts for a decade or more like mine has. And that's going to be what's best for everybody. We do require a capital contribution to fund your account in order to trade with us. We operate on a first loss system. So any initial losses you take as a trader would deplete from your capital before it could eat into any T3 money. What we're going to do on our end is we're going to start by providing you capital access, buying power, at 20 times your contribution for day trading, 8 times your contribution for overnight positions. So someone who comes into the firm and deposits $50,000, we basically start by allocating them $1 million to work with. That degree of leverage opens you up to types of strategies that are probably impossible to do in a retail account. It's also a little bit of a double-edged sword. If you load up max in a position and that position works out great for you, well, you can make a lot of money in a short period of time. But the opposite is also true. If you load up 20 times leverage in a position and you do not have risk management in place, you do not have money management in place, and that position goes against you, well, it's a great way to lose a lot of money in a short period of time. I tell people all the time, the key to this business is risk management. You buy the stock, it goes up, you're making money, congratulations, anybody can do that. Show me what happens when your ideas are not working out. Show me how you manage your trades when positions are going against you. That is what really separates the people who are successful in this business from the people who are not successful in this business. What I do as a professional trader is probably 85% risk management, 15% reward maximization. That's got to be the focus. So you're going to get capital access. It's potentially a huge benefit, and it's not something that you can really get in a retail account. You don't have to worry about margin calls or anything like that as a professional trader. It's pretty much a different environment. And if you're an experienced trader, Well, that's great too. You know, that's really what we thrive off of. We have, you know, traders at the firm, traders in my group, like I said, who've been professionals for decades. We have people who've been at T3 for decades. Former fund managers, former floor traders, former pit traders. And we are very well capitalized. So if you want to contribute $2 million into an account because you want access to $40 million, no problem. Here's my email address. Reach out. And you're going to get all this other great stuff for free. You get access to my training program for free. It's not even listed on here. You get access to my virtual trading floor where I do the morning and afternoon meeting each day for free. It's like a $2,000 a year value. You get access to Scott Redler's virtual trading floor for free. It's called the Trader Hub. It's like another $2,000 a year value. You're going to get Redler All Access for free. Scott's great. I learned so much from him over the course of my career. And again, this is just if you have an account with us. It's really that simple, a retail account or a prop account. As far as I'm concerned, I mean, I know that, you know, passing exams can be a pain on the prop side of the business, but even on the retail side, my true belief is that we have the best offering that exists because of everything you're going to get access to. Not just an account, but access to professional traders who have been doing this for a living and have, you know, decades of professional trading experience. So reach out. Here's my email address. Reach out to me about anything we spoke about today, about markets, about trading, about the firm, retail accounts, prop accounts. Get involved. If you think that this is something that you can be doing for a living, if this is a passion of yours, like it's a passion for me, if you want to wake up every day and love what you do like I do, well then email me. I see one other question, you know, came into the YouTube channel here. What moving averages are you using? I use an 8 and 21 EMA on every time frame. On my big picture time frames, I also will look at 20, 50, and 200 simple moving averages. But the 8 and 21 EMA, those are important to me. The space between the 8 and 21 EMA for any chart that I'm looking at is the space that I consider to be the technical equilibrium area for a stock. So, you know, to go back to my light speed charts for a minute, you know, again, if you're looking at this laser like we talked about at 38 this morning, and your 80 EMA is all the way down at, you know, not even $31, I would say that this stock is extended to the upside by $7, just to the upper band of equilibrium is how I would describe it. As an option underwriter. So there's another question that came in. Is it possible to work as a trader part-time as an option underwriter? So the firm is very open-minded as far as strategies go. The only thing that we really do not allow for in any way is the naked selling of options. So if you own the underlying and you want to, you know, sell calls against that, then that's not going to be a problem at all. But you know, we do not allow for naked selling of options. You know, it opens the firm up to unlimited risk. So that's the one strategy that we really do not allow for. So that's the answer to that question. But basically anything else is game. Back to here. All right, that's it. So again, here's my email address. So any questions about anything, feel free to reach out, and I'll be happy to either chat with you directly myself or set you up with somebody else on my team in order to do it. So have a great trading session, everyone. Have a great holiday. For people who celebrate Christmas, Merry Christmas. Enjoy your holidays. I'll be back next Tuesday after getting 4 days of skiing in this weekend, which I'm excited about. And we'll pick things up next Tuesday. We'll see what the market holds for us. I hope this volatility continues. Have a great rest of your day, everybody.